Politics doesn't just shape governments, it also shapes markets, investments, and our daily lives. If you heat your home, drive a car, use the internet, invest for retirement, or vote, political decisions and events are already shaping your world. That hidden force is called political risk. Uncertainty, which is created by factors such as instability, policy shifts, or power struggles. We now live in what some experts call a risk society, where the very success of our complex interconnected systems creates new, less predictable forms of risk that are much harder to calculate, if at all. At its core, risk is probability, the chance that an event will cause measurable loss times its impact. Risk management's main task is turning uncertainty into something measurable and manageable. However, much of what is called political risk is actually unquantifiable uncertainty, because unlike many measurable risks that follow normal patterns, their probability and outcomes cannot be reliably modeled. That is because political outcomes depend on human behavior, ideology, and often sudden decisions. Leaders may act irrationally with incomplete information, or with goals that put politics ahead of economics or the greater good. There are often unknown unknowns, making many events impossible to quantify as true risks, until after they've already reshaped markets, industries, or careers. Political risk takes many forms. Geopolitical shocks like wars or shifts in global power. Politics determining oil, gas, or mineral prices. Currency controls, defaults, or sudden regulation. Terrorism and cyber attacks. Corruption eroding trust. Politics matters. Even Adam Smith wrote that defense is more important than opulence. A reminder that political interests often outweigh economic logic. That's why political risk influences the value of bonds, stocks, commodities, and currencies. Political risk analysis has its origins in emerging markets where coups or nationalization could derail profits overnight. But today, even the richest economies are now in focus. Trade wars, populism, and political polarization are a global phenomenon. And with more threats feeding into one another, the line between manageable risk and deep uncertainty continues to blur. Political risk disrupts supply chains, drives costs higher, and rewrites rules overnight. Energy, minerals, and digital flows can all be reshaped by political decisions. As political risk is human-driven, outcomes are harder to model and often more decisive. However, measuring political risk is tricky. Standard statistical models work when the range of outcome is known, but often fail in the face of uncertainty. Think of it as a spectrum with risks following different statistical distributions, from the routine to the extreme. Political risk blends patterns with surprises. They are difficult to quantify, yet impossible to ignore. That's why some firms now consult external advisors, employ a dedicated team, or in larger organizations, even a chief geopolitical officer. And in some cases, companies can even buy political risk insurance, transferring some of the exposure, but never removing it completely. But you don't need a C-suite officer to start to manage political risk. Any business can build resilience by monitoring politics, stress testing supply chains, using scenario planning, diversifying exposure, and keeping an open contrarian mindset. because understanding political risk isn't just about defense, it's also about spotting the opportunities that volatility creates for those who are prepared.